Have you ever wondered if owning a home or renting makes the most financial sense in today's current market? In this episode, I'm going to show you what it costs to own versus renting. Many think having no mortgage is a financially secure position, and it certainly is, as long as you have an income. The interest that you pay on your mortgage, if kept to maturity, could be more than the actual amount of the mortgage. When we look at the amount of wealth transferred to the bank in interest on this type of mortgage, you certainly want to do everything that you can do to reduce the amount of loss. Unfortunately, the way most people go about it actually begins the construction of a second house for the bank. It's the beginning years of the mortgage when the majority of your monthly payments are mostly interest. If you pay on the principal of your mortgage during those years, you are reducing the amount of your interest. While early principal payments can reduce interest paid, it's easy to see that by making early principal payments, the bank will get less money and the construction of the bank's house slows down. There is another little understood concept to consider concerning interest transferred to the bank. This concept is known as opportunity cost. I will explain by telling you my rich aunt's story. Suppose you just purchased a house for $400,000 and have yet to make your first payment. Your rich aunt cashes in one of her jumbo GICs and wants to pay your mortgage off. That's not bad. She wants to watch you enjoy the money while she's still living. You decide that since you do not have to pay the $2,604 monthly mortgage payment on your house, that you're going to save that monthly amount. At the end of 25 years, you would have $781,372 if you had simply put the money under your mattress. But we know you wouldn't do that. You would invest that money. If you had invested the monthly payments and averaged an 8% rate of return, at the end of 25 years, you would have $2,467,000. Let's compare renting versus owning a condo in Calgary over a 5-year period. Today, you can rent a 2-bedroom condo in Calgary for $1,987 a month. Total rent for 5 years would be $118,020. This same 2-bedroom condo in Calgary with a $400,000 mortgage would cost you $3,585 per month. That includes mortgage payments, property taxes, condo fees, and annual maintenance. Owning the same condo for 5 years would cost you $215,139. You paid $97,119 more to your bank to be an owner and only reduced your mortgage by $40,000. What if you put this $97,000 into a tax-exempt, dividend-paying insurance contract every 5 years that's guaranteed, no risk of loss to your money, with 100% access to it anytime? Imagine what that would grow to and compound to after 10 years, 15 years, how about 20 years? You could easily retire very comfortably. 3 years ago, mortgage rates were 1.55%. Today, they are 6.19% for a 5-year term. Everyone looks at the impact of the payment. $1,608 to $2,604, an increase of almost $1,000. But the down payment power of your payment is greatly affected by the shift in the rate. Not only are you paying $1,000 more a month, your payment is only paying down your principal amount by half, and you are now paying 4 times more in interest payments. An interest rate of 6.19% on your mortgage payment equals $567 of principal and $2,037 in interest. After 5 years at 6.19% interest, how much have you paid the bank? It's well over $116,000. You paid $156,274 and only paid down your mortgage by $40,000. Don't forget, you have had to pay property taxes, condo fees, and maintenance above this amount. Did you know that you don't own your home until you make your last mortgage payment? That's right. You're just renting your home from the bank for the next 25 years. Does that make sense? With the current high interest rates, why buy and give your bank hundreds of thousands of dollars in interest for the privilege to say you own versus renting? Discover how to create a savings and financing account that you own and control at McGuireFinancial.ca and request your free report on how this concept works. While you're here, take a moment and click the thumbs up button. It really helps us out. And if you haven't already, go ahead and subscribe. We'd love to keep you posted.